a very big crowd today. Hey, Greg, how are you? Greg says one day he wants to be trading right alongside me with a subscription service. He knows I'm the real deal. I appreciate that, Greg. Thanks very much. Appreciate it. Okay, let's get started. Okay, again, as was mentioning, I've been doing this for 17 years full-time trading. And listen, trading is all about improving from just continuing to improvement all the time. I'm always looking for new strategies, trying to hone everything, tweak everything to get it better and better, which I've been doing for a long time. And it's not you don't get to the point where you know how to trade and you don't modify after that. It's always a learning process. The market is very dynamic, so it's very important to keep working on that. All right, so let's get started. Again, first thing I have to do is the disclaimer here. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. That's very important. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, off we go. If you have any questions, I'm going to leave the question box open. So if you have any questions during the presentation, I'll try to answer them right then. If not, and it's a question I can't answer relative to subscriptions, etc., you can call Rory at 786-732-4656, or you can just put your name and phone number or your Teams username in, not Skype, but Teams username in the chat box, and he'll get back to you on that. Okay. All right. So let's get started. Just I want to cover quickly just what we do in the room and on the alert service. That we do mostly options strategies. These are most of the strategies that we use. Straight calls and puts, obviously. Straddles and strangles. This is a non-directional trade that works really, really well when it's structured correctly with the right stocks. We had a huge one on. We had a huge straddle this week on a strangle actually on silver overnight from Wednesday night to Thursday. Put it in Wednesday afternoon late. Got out Friday morning and Thursday morning and got in for $580 a contract and exited for $1,660 a contract. Big gap, and things like silver are pretty nice because they've been gapping lately, and gaps are really good to do straddles and strangles overnight. You don't care which way they go. All right, we do debit spreads using weekly options expiration. Time spreads, these are done over earnings. This is a non-directional trade. It's only done over earnings, and it's meant to capture what's called the volatility crush when earnings come out. If you're not familiar with that, when the earnings come out, before the earnings come out, the market makers jack up their premiums on their options a lot because they don't know which way the stock's going to go and how much it's going to move. So they jack it up, increasing the volatility. Once earnings come out, the volatility gets drained out of those options, and we take advantage of that with what's called time spreads. It's actually a calendar spread, but it's called a time spread because it just uses current week and next week. We use what's called a weekly ATM strategy. This is where we actually sell puts on a weekly basis against a neutral to bullish stock while holding a longer-term dated put further out in time to protect ourselves from any kind of a stock drop. So this is a fairly forgiving methodology right here. We just finished up one. We did it in 1 week on Schwab, and we just put it back on again this week on Schwab. Worked out really nicely, about 20% profit in about 4 days, and then we just put it back on again. We also do credit spreads to capture premium over a few weeks, where you just put in what's called call credit spreads and put credit spreads. We are actually bringing in premium when you do that, and it's structured very specifically. You have to have a good understanding of how these work, and I do have videos on all of our strategies. Now, one thing I want to talk about briefly here is SPY Super System intraday strategies. I have 2 intraday strategies that we use in the room. Now, this is for intraday trades. These are quick trades. These are trades that for the most part, I can't post and I can't send alerts out on because they're much too quick. But we have 2 strategies now that are impacting by using 5-minute charts that we would trade just very quick trades, 5-minute, 10-minute, half-an-hour trades. We have what's called the SPY Super System methodology. This is for trading the SPYs, the Qs, the IWM, futures, or even stocks. Very specific. And then we have a new one I just introduced, and I've been testing this for about 3 months now. It's called the UMCAT. This is for high momentum, high volume trades. That's UMCAT stands for out of the money catalyst And we'll talk about this. This is an extremely profitable strategy if you use it correctly. I emphasize, if you use it correctly. You generally do not want to be taking out of the money calls and puts. But this particular strategy, it increases your leverage a lot, and they work very, very well. Okay. Hey, Gordon, can I touch on how much time you have to enter a trade? For instance, I might be busy for an hour when the alert comes out. Yeah, when the alerts, when they come out, Gordon, they're gonna, when I'm sending an alert out, these are not for quick trades. Most of the alerts that go out are geared for swing trades, right? And I'll give you an entry price on that, right? And typically, if you don't see it in an hour, a lot of times if you put the order in for just to get the same entry price that we wanted, a lot of times you'll get filled on it because the stock will come back. And sometimes it's pulled back actually after the alert comes out and you get in cheaper. But the key is the trades that go out on the alert service are geared for the most part to be swing trades, which means you can keep them overnight at least, and if not a few days. So those are the only ones that go out on the alerts. I don't do them for these quick trades. So if you're delayed an hour or so, you still should be fine. What delta options do you use for the UMCAT strategy? I can't tell you exactly the deltas because it depends on the volatility of the stock lead. But again, I'm going to get into a lot of details on that in just a bit. But typically, I'm doing out of the monies, and I want to go as far out of the money as I can to get the cheapest one that I anticipate that the stock can still get to the strike price. Okay, so most of the times on stocks that are very they don't move an awful lot, what would be called stocks like Verizon and General Mills and things like that don't move a lot, I'll just go one strike out of the money. On stocks that can move a lot, Tesla, APP, Apple, some of the really high volatility stocks, I'm going to take a look at the option chain. A lot of times I'll go 2 or 3 or 4, and something like Tesla, you can go 6 or 7 strikes out of the money, and if you get the direction right, you'll still do extremely well on that. Okay, all right, so let's move ahead here. Now, the reason I'm talking about these intraday strategies, all right, the SPY super system and the UMCAT strategies, there's a rule change that's coming up this year, all right? There's a rule called the PDT rules. This is a pattern day trader rule. This requires you to have $25,000 minimum in your account to trade more than 3 intraday trades in a 5-day period. So if you don't have $25,000, you're just trading a $10,000 account, you can take more than 3 intraday trades in a 5-day period, unless you have a cash account. And cash accounts are a different story. If you have a cash account, they don't close the same day. If you buy a call option on Microsoft in the morning, and then you sell it in the afternoon, you don't get the money that day. The money doesn't go back in your account till at least 1 day later. Sometimes it's more. So generally speaking, what we're talking about here is $25,000 minimum. It's going to drop down to around $2,000 or $2,500 sometime in the near future, right? So this is going to allow millions of new traders to suddenly gain full access to intraday trading, right? There's a lot of people out there with small accounts that want to trade intraday, but they can't. Sometimes they'll trade futures. Futures are tough. Futures are very difficult. You don't have any relative strength to use. That shift is going to demand more fast, disciplined, momentum-based strategies. All right, so we're adding the UMCAT strategy now to prepare traders for far more accessible, far more active market environments. And one thing this is going to do, keeping in mind that we make our money from retail traders. We don't take money from institutions. We make all our money from other retail traders. And think about if you were doing quick intraday trades, and all of a sudden, millions and millions more intraday traders are all of a sudden have the availability to make intraday trades every day. So what does that do for you? It's going to give you the ability to have a strategy that you know is going to work, tried and tested, and you've learned how to use it. When all these people flood into the market, you're going to be able to take advantage of that. It's going to increase our profitability quite a bit, I suspect, because there's going to be a lot of other traders in there who honestly, they don't know what they're doing, and they're going to be doing intraday trades. All right. Okay, and this is what the alert service looks like. It used to be called Compass. It's called SPY Super System now because we've enhanced this. But this is the text alert service. They go out on your phone. You'll get them in about, I check them. I'm in the service, so I know. I get them in about 5 to 6 seconds after I set them out. Does it hit my phone? and I'm on Verizon. So, okay. Now I do want to talk about one thing before we get into the this buy super system. I want to talk about what drives markets, what moves markets, and I do this every webinar. And if you've heard it, I'm sorry, it's redundant, I know. But market consists of a bunch of small traders, millions and millions of retail traders such as myself, and most likely everybody here. We're retail traders, all right? And then it's made up of institutions. This is the institution ball right here. Now, let's look at it here. This is institutions, and here is the retail traders. This is us, right? The critical thing to understand is if the institutions aren't in the market in any big way, and when I say a big way, I mean you don't have a whole bunch of institutions pushing the stock one way. You can have institutions in there all the time, you do, but some can be buying, some can be selling, some can be, you know, hedging. There can be a lot of work going on with institutions, but what we're trying to find is situations where the institutions are coming in force. In other words, there's a lot of institutions pushing a stock one way or the other. We want to know about that because this is what moves markets. New institutions, they're made up of investment banks, Goldman Sachs, Bank of America, JP Morgan Chase, all the big investment banks. But they also include hundreds of hedge funds. There's hundreds and hundreds of hedge funds. They're also made up of pension funds, police pension funds, firemen pension funds, state worker pension funds. They have billions of dollars in those accounts. And then you have mutual funds. T. Rowe Price, Vanguard, billions and billions of dollars. Those all make up institutions, all right? And this is who we're trading. We want to trade with. When they're in a trade in force, we want to be in there in force with them. We want to ride that. If they're not in there, we don't want to be trading it. All right, so that's how we make our money as retail traders. And remember, institutions, 85% of their trades or more are coming from algos, the computerized programs that look for specific setups in the market or specific news to move the market. I mean, if you ever look at this, if you ever look at the SPY, the S&P 500 on Fed Day, you know, on a Wednesday at 2 o'clock when the Fed comes out with their new interest rate, you watch the market and watch the SPY on a 5-minute chart or a 1-minute chart. Watch the volume come screaming into that at 2 o'clock in the afternoon, and I mean 2 o'clock in 1 millisecond. So there's no way anybody's doing that on it with a mouse clicking on it. That's an algo. They read the news, they get it as soon as it comes out instantaneously, and they start to trade off of it. That's where your trades. That's where most of the trades are coming from. It's institutions, all right? And it's very important to understand when we talk about the software. We're going to be talking about for some indicators on the chart, such as the volume weighted average price, the VWAP, on the 5-minute chart, on the daily chart, the 50-day moving average, the 100-day moving average, the 200-day moving average. All the institutions have programs. They know where all those levels are, which is why they are effective as support resistance levels, right? It's just not arbitrary. They have them coded. All right, so that's what institutions are, and that's what we want to do is find out what institutions are in the trade, and we want to trade with them. Okay, now this is something I've thrown in here. It's kind of a little bit off topic, I suppose, but this is a blackjack table, and ace of jack spades, a couple $100 chips, beautiful, nice blackjack table. What in the world has this got to do with trading? Well, if you've ever talked to anybody that said you wanted to be a day trader or you wanted to start trading, what you're going to hear from a lot of these folks is you're just gambling. It's fixed. You can't beat them. It's gambling. And the question is trading stocks and options gambling? And it's the answer is mixed. All right, because when I was much younger, I made my living playing blackjack as a card counter. I lived in Las Vegas, and I did it as a card counter out there. And card counting is kind of just a word for keeping track of what the composition of the remaining cards are on the deck. When you're playing blackjack, if the remaining deck has a lot more small cards in it than the big cards, than it would normally. In other words, a lot of the big cards have been removed and the little cards are left in there. Then the house has a much bigger advantage. But when the small cards are removed from the deck, 8, deuce through 7s are removed from the deck, so you have many more big cards in the deck, 10, jack, queen, kings, and aces, then the advantage swings to the player. And when you get an advantage as a player, you can identify that. Then what you do is you make bigger bets and you take more hands. You're trading when you have an advantage. And you're betting when you have an advantage. So I knew when the cards were in my favor, and I'd increase my bets. When they come down, the house was in their favor, I just bet the minimum one hand. It went up and gave in my favor, I'd be betting 10 times my minimum and maybe have 3 or 4 hands out there. Just depends. All right, now the reason I bring this up is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader has no edge. So in essence, they're gambling, right? So if you don't have a methodology that works, and ours work 85 to 90% of the time, if you don't have one of those, then you're gambling. I mean, you're basically you're gambling. It's like throwing a dart. You don't know if it's gonna work or not gonna work. Now I will make this one statement right here. Whether you're counting cards, playing blackjack, or trading, both of these require discipline and emotional control. And this is really important because if you have the best strategy in the world to trade, but you cannot maintain discipline and you let your emotions take over, that is going to kill you. I mean, it's going to destroy your trading, right? So both of them require discipline, emotional control. So I consider the SPY super system our card counting system. It gives us an edge over the other retail traders, and we can take advantage of that and become consistently profitable. And the SPY super system, in conjunction with identifying the best high probability trades, can lead to consistent results. Again, it's not just knowing if the institutions are in the trade. Once you identify some stocks that institutions are in, then you want to find the very best one. And that's where we drill down with technical analysis to get the very best one. Okay? All right. Now, so we have a couple of rules to trade by in the room and on the alert service. We have one called trade the best, skip the rest. This is where we basically are just looking for the very best trades there are. We're not just trading to trade. We can skip ones that may look decent, but they don't have institutions in them. So we don't take a lot of trades. This is very important. We're trading the best and skipping the rest. And skipping the rest probably creates more profit for you than even the trading the best is concerned, because you're bypassing trades that would have been losers. Okay. And secondly, our objective is not to make trades. Our objective is to make money. All right. This is to try to keep retail traders from over trading. A lot of traders feel like if they're a trader, they need to be in a trade all the time. You don't. You just need to be in a couple of decent ones. That's all. You don't need to be trading all the time. So our objective is not to make trades. Our objective is to make money. Think of that when you're going to trade. Am I taking this trade just because I'm bored? Because I just want to have a trade on? Then you shouldn't be taking. And maintaining discipline, learning and following the process. We're going to go over the specific process that we use to find the very best trades and follow them. And then remain patient. And this is a very big key to being a consistently profitable trader. Patience is extremely important. Remaining patient until the setup comes to you to the level you want, and then don't hesitate. Once you find a trade, it's set up the way you want it to. Don't get analysis paralysis. Jump into the trade and take it, but remain patient until the setup comes to you. And that's where basically using support and resistance levels to enter trades is really, really important. Okay, and as a profitable traders, we need an edge over the other retail traders. Our edge is the SPY super system software. This software tells us when the institutions are in there. It gives us high volume information. We've got all the indicators on there that we need to identify the highest probability trade setups. We also trade relative strength and relative weakness. Now, don't confuse this with an indicator called RSI, relative strength index. I don't use RSI at all. All right, a lot of people tout RSI as a great indicator. Listen, a stock can stay overbought or oversold for a long, long time. And if you're trying to pick the top based on the stock that's got a lot of relative strength and it's been too high for too long, you're trying to pick a top. That's not a winning strategy. So we look for stocks that have relative strength to the SPY or the Qs, but most of the SPY. If the SPY is moving sideways and down, and you've got a stock moving up, then that's got relative strength. I mean, it's not that complicated. And if the market is moving up and you've got a stock that's moving down, it's got relative weakness, right? And they're going to outperform. If you're in a stock that's got relative strength and the market turns hard against you, all right, then it's not going to drop as fast because it's got relative strength to the market. We trade with the market trend. If there is a market trend, many times there isn't. And a lot of the market trends will change from day to day, intraday. They'll be bullish in the morning, bearish in the afternoon, but you want to be able to identify that trend. And then buy near support and sell near resistance. This is like critical. Buying near support, selling near resistance is critical because if you get in near support or you're going short near resistance, if it goes against you, you don't have an awful long way to go before you can get out. So your losses are minimized. All right. This is the compass system. It's now called the SPY super system. I'm going to go over this fairly in depth here in just a minute. But again, it identifies when the institutions are in the trade, when they're not, and the information is presented in color codes. So it's very easy to identify when institutions are in the trade and when they're not. And even for new traders, they'll be able to identify this situation without having to understand a lot of detailed technical analysis. Okay. So this is how we get an edge over retail traders. I'm emphasizing this again and again. We only take trades that are being driven by institutions. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market. If you just do these three things as a retail trader, you're going to be ahead of about 98% of the other retail traders in the world. You've just got a lot more information than they do, and there's a lot of crazy strategies out there that people tout all the time. 95% of them don't work. So you want to work with ones that do. All right, so how does this give us an edge? Our trades will be supported by institutional buying and selling. They'll be outperforming the index, the SPY, and they are moving in the direction of the overall market. Right? Sounds pretty simple. Okay, the SPY super system, we're going to talk about that. Now, this is a software that I run on Thinkorswim. You can run it on Ninja. I run it on Thinkorswim, but you don't have to trade on Thinkorswim. Thinkorswim is where I actually have the information. The actual charts are put on Thinkorswim with these indicators. But I trade on Tradia. You can trade on any platform you want. You don't have to trade on Thinkorswim. Okay. Oh, Susan. Okay. Yeah, Rory will see that. That he'll send you a recording on this. Thanks very much. Appreciate it. All right. So the SPY super system. This is I emphasize it up front. This software, it's the critical element in finding and trading the highest probability trades. All right. It's the engine that drives our exceptional results. And you're going to see toward the end of this presentation, I'm going to go over some specific, monthly, the months that we've traded, how much we've made, how much each trade has made, etc. But I want you to remember that these results that you're going to see are only possible because we've got the information that we need to do this with the SPY super system. Again, the ability to identify when institutional players are driving a bullish or bearish move and when they're absent is the key factor in pinpointing high probability trade setups. And that's the function of the SPY super system, and it's a critical component, right? I use this, it made a big difference in my trading. I increased my win rate from about 80%, 79, 80% before I had it to about 88% now. And that may not sound like a lot, but it's a huge difference. Yeah. Okay, and we do have a YouTube channel. Right Line does. I'm on there every day about 11:30 for about an hour. If you come into the YouTube channel, you'll get entered in my room. You'll see the room. You'll see the charts. You hear me talking to all the traders over there, doing some analysis on trades, etc. I am in the room all day from market open to market close. So if you can come into the YouTube, you'll actually see me during that time. And again, I take an hour for lunch, but basically I'm there from market open to market close, answering questions, suggesting trades, analyzing charts all day long. Okay. So in the SPY super system, the codes, the indicators are colored, right? We get green, bullish strong, blue is a bullish trend, red is bearish strong, and yellow is a bearish trend. These are the colors that we use for all the indicators. Right, so here it is, this is the SPY super system. And I just kind of want to show you what it looks like in the screen. But the system itself, when you see it live, you're going to see a bunch of scanners on the left-hand side, but I've expanded it to just show you the actual indicators. You've got some key ones on here, but the things to understand is this is called the current time frame momentum right here. and this is the multi-time frame momentum. This is what I use for 5-minute trades. If I'm just doing intraday trades, I only use the current time frame momentum along with the other indicators. The multi-time frame momentum is used for swing trades. This multi-time frame momentum and the current time frame momentum need to be aligned. They both need to be bullish if you're going long. They both need to be bearish if you're going short. You want those aligned before you take a trade for a swing trade, right? And this is a long-term trend. This, if the trend matches the multiple time frame, that even increases your percentage even more. All right. Now up here on this is a 5-minute chart. Up here in the price area where the candlesticks are, you've got several things here. These are support resistance level. Here's the VWAP. That's what I had mentioned earlier. This is a volume weighted average price. Right? Every single institution uses the VWAP on a 5-minute chart. This is where they determine to get in and out of trades. And you'll see a lot on how much this offers support and resistance levels. That's the VWAP. That's the pink line or the purple line. The green line here is the 15 EMA. That's the 15 exponential moving average. That's another support resistance level. And the white line right here is the 8 exponential moving average. Those are the 3 levels that we use for entering intraday trades. The VWAP, the 8, and the 15. Now in a daily chart, you're not going to have the VWAP, but you will have the 8 and the 15 in your other major moving averages. And those will become your support resistance levels as well. Right, so those are the 3 levels that we use for entering intraday trades. Right, now we also have, this is market internals. The market internals, this does not indicate what this is the SPY we're looking at. This does not tell you what the SPY is doing. Right, this tells you what the whole overall market's doing. All 6,000 stocks in the New York Stock Exchange, are they moving? It's basically color coded. You're going to have blue and green for up and red and yellow for down, and they just correspond with strong bullish and strong bearish, or bearish trend and bullish trend. This tells you what the volume is telling us. All of the stocks moving up, all that volume is added, and then it's subtracted out as all the stocks moving down. And that's going to tell you what the current market internals are. That tells you what the overall market's doing right there at that time on the 5-minute basis, right? So if you were going to go long, and this was going as a green or blue color here, then you know you're trading with the overall market right now. All right, now we also color code, by the way, our candles, and this is something fairly new, and this is really going to be critical when we talk about like the OMCAT trade and the SPY super system trades. Anything that is yellow, like this, that's a bearish, that would normally be a red candle. That's a bearish candle, but it's got high volume, over 120% of the average volume, right? The white candles are bullish candles. These are bullish. These will be green candles. These are bullish candles. If they're white, they're high volume bullish candles. And this is, remember this. This is telling you that the institutions are coming in, and they're coming in with force, and you can see what that did, right, for the next few candles. That's really important that they should understand what how important these colors are, right? Normally you're going to just see red and green, but white and yellow are important. They tell you that you've got big volume or high volume coming in. Right, so there's the SPY super system. That's the software. That's what it presents. That's all you need to have to actually trade the way we trade. To produce this kind of win rate, this is the criteria that you do need, and you can buy the software. So it's extremely useful. All right, everybody wanted to kind of get into Heiken-Ashi candles, and a couple of times I put it further down, and a lot of people said they came to listen about Heiken-Ashi. So we're going to talk about Heiken-Ashi right now, and then get into a lot more detail on the SPY super system. I'm going to look at some live trades. But I'm going to look at some live trades here too for trading Heiken-Ashi candles. But I want you to see what they mean. Does anybody here use Heiken-Ashi candles relatively consistently for either swing trading or day trading, or both? Because I use them and under specific, yeah, Doug does, yeah. I know you do, Doug. Doug been a member there for a while. He's using these intraday trades, by the way, the SPY super system trades, and doing really well at it. You know, it takes a little time to get used to, but once you've got it down, it's a really effective system. All right, so let's talk about Heiken-Ashi candles. All right, this is British pound, Japanese yen. This, you can ignore this. These are Heiken-Ashi candles. It doesn't make any difference. They look the same on if you were trading futures, if you were trading gold, if you were trading Microsoft, if you're trading Tesla, anything that you're trading, this is what Heiken-Ashi candles, how they're structured and what they look like. Okay. Couple things important. Flat-topped candles. Flat-topped candles are bearish Heiken-Ashi candles. Any Heiken-Ashi candle with a flat top is bearish. Any Heiken-Ashi candle with a flat bottom is bullish. Right? These are bullish candles with a flat bottom, flat top. In other words, no wick, bearish, no tail, bullish. Right? So here we have a trend of Heiken-Ashi candles. These are Heiken-Ashi bearish candles. Now, one thing to notice is each candle starts halfway down or halfway up the previous candle. Right? It's always going to start halfway down that candle on these bearish ones. Right? It's because of the way they're constructed. They're made up of two candles. There's two candles that they apply a formula to come up with the Heiken-Ashi candles. Now, this is a bearish Heiken-Ashi trend. You can see this. Flat tops after flat top after flat top coming down. Now, you notice you start to get a few little wicks here, and then it keeps coming down, and then you start getting a green candle with a wick and a tail. What we're looking for, typically, with Heiken-Ashi candles, is to find a reversal. We're trying to find a stock that we like long, it's pulling back towards support, and we want it to bounce off of there and go back up into the original trend, right? So when's the best time to do that? Well, here's a bearish trend here. This is pretty obvious. It's coming down here. We're getting wicks and tails, wicks and tails. Now we get a flat bottom candle right here. That's a bullish Heiken-Ashi reversal candle. It's a reversal candle because we're coming out of a bearish trend. So you could take it here, all right? And it's got, and you've made up a little bit of money as it moved up. But here's a little caveat when you're taking a reversal candle on Heiken-Ashi. The Heiken-Ashi reversal candle that you want to use should be as big as, or pretty close to as big as, or bigger than the candles that created the original trend that it's reversing from, right? So these candles are pretty long. This candle's not, this is not big enough to get me into the trade. I'm not going to take this. Now, if you took it, you would make money on it, but I wouldn't take it on here because it's too small relative to these. So we watch it and we watch it, and now it comes back down again. Here's a bearish Heiken-Ashi reversal with a follow through for a candle. And then we start to get wicks and tails. Here is a Heiken-Ashi reversal bullish candle right there, right? That's a Heiken-Ashi reversal bullish candle. You see the flat bottom, and look how big it is. That is where you would enter this trade for a long, right there. Heiken-Ashi reversal candle with flat bottom, and this is a beautiful trade, right? And it's important to understand one thing about Heiken-Ashi candles. You don't have to wait for the Heiken-Ashi candle to complete before you can take the trade. When you were trading normal candles, you should always wait for the candle to complete before you decide to take a trade. But Heiken-Ashi candles, once they're about halfway into the cycle, so if it was a 5-minute cycle, oh, you don't see my screen? Really? Let me try sharing again here. It's still there. You see it, Michael? Okay. Shows the pound yen. Yeah, that's it. What's the time frame? Susan, you can use Heiken-Ashi on any time frame. I don't have a time frame defined here. This could be a 5-minute chart. This could, it looks like it's a daily chart. It looks like a daily chart because here's the dates down here. So this is the daily, but it doesn't matter. Heiken-Ashi candles can be used on any time frame, right? Sandra, I don't know, you might want to restart it because everybody else can see the screen okay. All right, so here is your Heiken-Ashi reversal candle that I was pointing out. This is the one you would take. Big candle, but you don't have to wait for it to complete. So if this was a daily chart, for example, once by about 1 o'clock in the afternoon comes, if you've still got a Heiken-Ashi reversal candle, you can take it long. You don't have to wait for the end of the day. If you're in a 5-minute trend, you only have to wait about 2 minutes, 2.5 minutes into the 5 minutes. And if it's formed a flat bottom already, then it's going to be that way 99% of the time. Okay? So here's the Heiken-Ashi reversals right here. This, you notice we get flat bottom, flat bottom, flat bottom, flat bottom. This is a trend using Heiken-Ashi candles right here. And it just keeps going up. So you ride this straight up until you get here. You see you're starting to get a wick and a tail here? And then over here you got a red candle. You're out of the trade right there. This is your trade coming in right here. And you hope that this is actually at a support level. This is where you would ride it up, and that's where you would make your money. That's a pretty nice little trend. That's what Heiken-Ashi candles will do. And they really identify trends really nicely. They cut out a lot of the noise that comes with looking at 5-minute candles. You can see the chart, but no pointer. Maybe because it's white. Okay, can you see the pointer now? You see everything, Doug? Okay, thanks very much. All right, so again, this is kind of what we just looked at here. I'm just kind of going over this again because I want to reiterate this. This is a downtrending Heiken-Ashi candles right here. And this is one. This is where I mentioned this was not big enough to take the trade. Now, let's assume that this blue line right here, for example, is your support resistance level that you want to take it after the stock gets down to it and breaks through it and starts to go above it again. This is the level that you're looking for a Heiken-Ashi reversal candle. Right, so here's your Heiken-Ashi reversal candle. You got one here, but notice this is the one that went through it, right? And then it follows through. This is where you want to take it as it breaks through your support level. The blue line then becomes the blue dotted line becomes your support and resistance level. This is where you want it to stay above. But here's the trade. Now you're up here. Now you get a little red candle in here, but you're still well above your support level. And I wouldn't be getting out there. I think I'd give it a wait. And then you can see it takes off again. It continues on up. But you definitely want to get out when this happens. You get a very big Heiken-Ashi reversal bearish candle right here. There's your exit. So that's what I'm trying to get across is the method to use these. Obviously, if they're all there's always going to be some nuances in when you're trading and what the stock's doing. But this is what you're looking for. Okay. Susan, I don't know if you can't see the pointer. I'm not sure why not. What are the settings for the red, blue, and green lines? Here, these are just some random ones. This is most likely Bollinger Bands. I'll show you the real ones on the actual charts, but I just use as an example if you're having you're looking for support resistance level. I think these are actually Bollinger Bands on here. Okay. So that's the strategy. That's how you identify Heiken-Ashi candles. That's how you use them in your trading, right? Remember, key thing here: Heiken-Ashi candles, bullish Heiken-Ashi candles have flat bottoms, and bearish Heiken-Ashi can have flat tops. Can I show the entry again, Scott? Yeah, sure. Richard, any correlation in an uptrend? Any correlation between candle size and upper wick size? Okay, here's an interesting thing about wicks and tails, right? Wicks on bullish candles. In other words, you got a flat bottom bullish candle and you got a wick on the top. The wicks, actually, if you have a wick, it's actually more bullish than if it doesn't have a wick. That's the exact opposite from regular candles. But there's no really correlation between the candle size and the upper wick size, no. Can I show the entry again? Sure. Entry right here, right? Bearish reversal, bearish Heiken-Ashi candles. Here's the reversal right here, but it's too small. The candle's too small. Here's the big Heiken-Ashi reversal candle to the bullish side. There it is right there. Flat bottom, you would get in on this candlestick. As this goes flat, that's a Heiken-Ashi reversal, and it's a pretty big candle, telling you there's some force coming into this. And if it had volume as well, that's even going to give you more conviction in the trade. Okay, so remember, bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. Bullish Heiken-Ashi reversals are identified by a flat top Heiken-Ashi candle, that's bearish, followed by a flat bottom Heiken-Ashi candle, that's bullish. Now they don't have to come one right after the other. There can be doji candles in between. And bearish Heiken-Ashi reversals are identified by flat bottom Heiken-Ashi candles, followed by flat top Heiken-Ashi candles. Namra, so avoid candles with top and bottom tails? No. You see here, see how these have these tails on the bottom? That's good. That's a bearish sentiment on that candlestick. Normally that wouldn't be if you were in a regular candlestick. Regular candlestick, when you see something like this, you think they came in, they drove it down hard, and the buyers came back in and drove it up. That is not the case with Heiken-Ashi candles. Wicks on Heiken-Ashi candles and tails on Heiken-Ashi candles are not bad. Now, if you had a wick on a bearish candle, yes, it would be. But the wicks on bearish, the tails on bearish candles are not negative. They're actually positive, and the wicks on the bullish candles are also positive. Okay, does that make sense to you? You have to think a little bit different than what you do with normal candlesticks. Okay, so those are the key things here. Remember the Heiken-Ashi candles, the flat bottoms for bullish, flat tops for bearish. Richard, wicks appear on top also when transition from downtrend to uptrend. Here, when you're getting, like, if you're getting tails on a bullish candle like this, then yeah, that would be a transitional type candle. And the wicks on a bearish candle would also be a transitional sign. You can look at those, and when you start to get things like that, you see how you get a wick and a tail here, then you don't really have a flat top bottom candle here, do you? So if you're getting wicks and tails together, or a tail on a bullish candle, for example, like that, they're not as bullish. Okay, all right. So that's the key here, and that kind of covers Heiken-Ashi candles. And we want to recap the advantages of these. All right, they smooth out price action, reducing noise. Makes identifying trends much easier. Improves identifying confirmation of trends or trend reversals, and helps identify potential exits when candle bodies shrink or reversals occur. All right, Namra, you meant wicks on both sides. Yeah. If you've got a wick, and I call them wicks on the top, tails on the bottom. But if you got what some people call them shadows, if you got them top and bottom, yeah, that's more of a transitional type candlestick. All right, now I'm going to show you just two charts here, and then I'm going to go to some live charts. I want to talk about I'm going to look at the SPY Super System live, and I'm going to take a look at some of the candlesticks that it has there. All right, and how we use them. So this is an old chart of Uber, but the whole point here is I want you to look here at May 1st, right? And this is these are regular candlesticks. See, we get a gap up, we get a gap up. This is on my chart called DC 2000. This is a chart used for charting and for its deeper technical analysis. But you can see that you have a gap up. So this is Uber, right? This is a regular candlesticks. Kind of tough to decide what to do here. But here's Uber on the same one. Here's May 1st. Here is May 1st here, right here. Here's May 1st right here. Okay, here we are. Heiken-Ashi. These are Heiken-Ashi candles. Flat tops all the way down. Very Heiken-Ashi, very bearish. Then we get a wick and a tail right off. This purple line, by the way, is the 200-day moving average on the daily chart. Now here's a candle forming on May 1st, and this is a Heiken-Ashi reversal candle, and it's big compared to the rest of the downtrend. All right. So that is where you would take this trade right there on this candlestick during the day, somewhere during the day, after probably in lunchtime. You could take it as a long, and this is the movement you would have got. And you notice what's missing. See these gaps? No gaps. There's no gaps on Heiken-Ashi candlesticks, right? So this is where you would take the trade, and this is the move you would have got. And you can see that in my chart, they turn green here, but these are all green. These just tell me that the Bollinger Bands are expanding, breaking out of compression. But here we go green. This is where you would get out of the trade. See, changes color, wicks and tails. It's flattening out. It's losing momentum. You take the trade off. That is a Heiken-Ashi reversal candle, and that's a beautiful example of one. And if you look at where it went, you got in here, right? You rode it all the way up here. This is a very big trade. It's a very big trade on Uber, because you get in here down around about $32, and this thing all ran up to about $38, $39 on that. But you've got options. That's really huge. Does the wick have to go through the support to enter the top of the body, or the top of the body? No, first of all, if you're going long, you're not going to have a wick on a Heiken-Ashi. Well, you could have a wick on the Heiken-Ashi candle. No, it doesn't. Either one, Doug. Either one. the wick of the tail, as long as it's broken through there. And you can always switch if you want to be for sure about it. You can switch to regular candles and see if you've broken through the support or the resistance level. How do I find stocks to follow on a daily chart? We use scanners. We use scanners for it. We got several different scanners, and I'll show you those. I've got some on TC2000 I use, and we have a bunch of them built into the SPY Super System. Okay, so there is Uber. Now I'm gonna switch to the SPY Super System live charts here. All right, so this is the SPY Super System right here, and I'm gonna move this back. These are some of the scanners. One of the scanners, this is called cascading up. This is how we find relative strength stocks, cascading down relative weakness stocks. This is one Wyse bull. This is how we find potential swing trades. These cascading up scans can be switched to daily or 5 minute. This is on 5 minute right now. Same thing as cascading down. So if you're looking for swing trades, you're going to be looking for cascading up daily, cascading down daily, and this scan right here, one Wyse bull and one Wyse bear. That's where you're going to find swing trades. 5 minute trades, this is where you're going to be looking for intraday trades on a cascading up, cascading down. All right. So let me just move that out of the way for right now, because I'm going to look at some Heiken-Ashi candles, and I want to look at a couple of stocks. All right, and I want to look at daily charts here. All right, on this platform. So again, this is a SPY Super System. This is TC. This is a toss. Make a swim. There's that platform that we just talked about earlier. All right. So let's take a look here. And by the way, there's no VWAP on a daily chart. VWAPs, institutions don't use those on daily charts. They use the 50, the 100, the 200, the 8 exponential moving average, the 15, but they don't use VWAP. Right, so take a look. Let's take a look at ARM, and I'm going to switch this now. This is a regular candlestick chart right here. I'm going to switch this over to Heiken-Ashi so we can study Heiken-Ashi a little bit. Right, so I go to candle type. I switch to Heiken-Ashi. All right, so here's Heiken-Ashi candlesticks. Now this is ARM. This is a daily chart on ARM. You can see the downtrend here. See the Heiken-Ashi reversal candle here. All right, and you see the flat top. You see yellow. This is a big reversal with volume. Notice down here on the current time frame momentum and the multi-time frame momentum, they're both either yellow or red. Bearish, bearish, bearish. Institutions selling. Institutions selling. This is where you could have taken a daily chart, a swing trade on ARM to the downside. But what we're talking about is current situation right now. Here's ARM right now. All right, this is Friday. It's the Friday candle. It's a flat bottom, right? Coming off of nothing really big, just a kind of a compression, right? So we're getting a flat bottom. We have blue here, so it just turned bullish on the current day. It just turned bullish on the multi-time frame. Trend hasn't changed yet, but that's okay. In a situation like this, when you're coming off a low, as long as these are lined up, you're okay. That is a trade for Monday morning for a Heiken-Ashi reversal candle to the upside. It's a bullish move right there, right on ARM. And that's how you spot it on the chart here. Also, Under Armour was one of them. Here, it says Under Armour, flat. See, green, 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 flat bottom, coming off of a sideways move. Right. If we look at it on a regular chart, we can go back and look at a regular chart. Right there, there it is. There's the candlestick we got. UAA, nice little move, very bullish. Look at it Monday. If it's green and moving up, it's a good entry. All right, for UAA. All right, so let me switch over here back to Heiken-Ashi. I just want to look at a couple of these just so you can see them in real time what they look like. All right, JP Morgan, another one that kind of jumped out. Okay, JP Morgan right here. Now JP Morgan has been it's strong, very strong. It had been very strong earlier. It's been coming down, and now it's trying to go back up again. And notice we just switched to bullish on the multi-time frame momentum on Friday. Current time frame has been bullish for a bit, and the trend is green. This is a beautiful entry for re-entering in JP Morgan right now on Monday, right off this Heiken-Ashi bullish candle right there. And it's got volume. Notice the white candle. White candles have high volume. Yellow candles have high volume bearish, high volume bullish. So not only are you getting a Heiken-Ashi candle, but you're getting a Heiken-Ashi candle with high volume. This is now you got to look at other technicals to see where you are on the daily chart relative to any kind of resistance levels, etc. But this for an entry level, that is really nice. All right. I'll take another look at one here, GLW. Here it is, GLW, all green. it's been coming up. This is what's called the Heiken-Ashi continuation, because you already had bullish reversals here, and it's just kind of moving sideways. This is a Heiken-Ashi continuation right here, right? So that's pretty nice on corny, very nice. And you can see the institutions are buying the heck out of this thing. All green, all green. All right. And one more, and then I'm going to look at a couple of bearish ones so you can see those. Whoops, ATI. There's ATI right there. Again, been compressing. It had a big move here, and then it's kind of flattened, and now we're getting another continuation with a high volume here. This is a pretty nice uptrend, actually, in ATI. I do like this ATI setup for potential swing trade along. All right, and we'll look at a couple of bearish ones, and then we'll move on. Adobe, pretty bearish. Heiken-Ashi reversal. Now, it doesn't have a high volume reversal here, but it got one right here. This is where the actual Heiken-Ashi reversal occurred. This is a Heiken-Ashi continuation, and we're getting flat tops on these. And we did have a wick and a tail here, and a flat top here. It's not my most favorite because of the fact that this candle hasn't turned yellow. And we'll take a LIN, L-I-N, for potential short. All right, so this has been a nice little uptrend. Nice little uptrend. And there's a Heiken-Ashi reversal to the downside. But I want you to notice something. Multi-time frame momentum is still bullish. I can't take this trade short because this is not yellow or red. This just turned yellow, and this may turn yellow next week, but right now I can't take that trade, right? And it doesn't even have a high volume candle, so there's no way I'm going to be trading LIN short. Okay, just so you can see how you use these together in combination. See, AON again, another Heiken-Ashi reversal to the downside, but in current time frame momentum is still green. You can't take it. You've got to wait for another, look for a better trade, or wait for another day, or something like that. Again, patience is key here. LIV is okay now. It's coming down. You said a Heiken-Ashi reversal candle. This is actually kind of a continuation to the downside, and it just red, and this just went yellow. So this is one you can watch on Monday for potential downside on live. Okay. Jose, can you get a recording? You will get a recording of this presentation, yes. Does the system work for short-term scalping that would include some tick charts for time periods less than a minute? You know, I've never used it on anything less than a minute, William. I'm not Richard, because I don't hyper scalp. I suspect it does, but I don't know. I would have, because I've never run it off a tick chart. Now, if you're using Ninja, I'm pretty sure it works over there off a tick. I've never used tick on Thinkorswim. I use it on 5 minute. I know a lot of people use it on shorter time frames than that for scalping, but I scalp. I don't really consider it scalping. I call them, you know, intraday trades, and I use 5 minute candlesticks, and there's a lot less noise doing it that way. All right, so there's live. So those are our Heiken-Ashi candles, and if I switch this back over here, if you're looking at, like, at the end of the day, if I was looking for something for a long swing, if I use these, you're going to notice that all of these on this here, you notice that how bullish that is. Coca-Cola, Caterpillar, right, with a nice Heiken-Ashi continuation candle right there. Cisco, very bullish, very bullish. NVS, beautiful setup here, very long, with another flat Heiken-Ashi bullish candle right there. PM, Pepsi, all really good long ones, good strong long stocks right there. Amgen, another good one. So this puts out some pretty nice trades. Now on the 5 minute chart up here, if I was switching to 5 minute, just so you can see how to use the scan, if I'm switching over to 5 minute, I'm going to look at these 5 minutes. This is off a 5 minute chart. This is showing what's happening at the end of the day. So if this was occurring during the day, you could be identifying setups to take by super system trades or UMCAP trades right from here. Okay, that's how these things work. Obviously down here you're going to see some bearish ones, and but it was strong yesterday. Obviously it was a very big strong day. So there's not too many bearish charts in here that actually have cascading down. But so those are the kind of scans that you can use. When the big candle up days, how do you get with big candle up days? How do you get in a retrace, Gordon? Well, when you're looking at a chart, and you have a big up day, a lot of times, a lot of times it's gonna retrace. If it's too far extended, the strategy I use, if the stock on a daily chart is extended by more than like 1 3/4 or 2 ATRs, which means if your price on the stock is extended away from the 8 exponential moving average on the daily chart by more than 2 of what the average true range is in the stock, is too extended. So I wait for it to come back. Right? That's what I use for criteria for stock being extended, because you don't want to chase. That's a thing where you don't want to chase. You would then just wait for it to come back to a support level, perhaps put an alert on your chart when it comes back down to that support level, whatever it might be, 50 day, the 100 day, the 200 day. Then you would take it. Okay, so we're gonna move along here now. So those are charts there. Let me switch over to where are we here? Okay, look at some live Heiken-Ashi reversals. Okay, so here's again the color codes for the SPY super system indicators. We've already looked at these. All right, green, blue, red, yellow. Pretty obvious. Not very complicated. Now I did update the chart. We talked about this already, but we've added the 8 exponential moving average, and I've also added high volume candles. So these two things work really, the high volume candles really help a lot with finding, not if it's a good trade, but an excellent trade, right? And so we're gonna look at some of this stuff. Using the SPY system, super system indicators in conjunction with the high volume candles to find the best entries. High volume candles are white for bullish, yellow for bearish, okay? All right, so here we go, there they are. Here's the white, here's the bullish candles, there's a bearish candle. We didn't get much follow through there, but we had a bearish candle. Typically, if you're going to take a trade long, for example, on an intraday basis, if you're going to go long, you really want the stock to be green for the day. You want to be trading in the direction of the trend. And if you want to go short, it should be vice versa, right? But so here's the SPY super system. This is what you need to do these high volume trades and to swing trades as well, obviously. All right, so as I'm going to get into the SPY super system and the CAT trades here and using it, right? So this is the probability, the funnel that I use, the high probability trade setup funnel. The first thing I look at is if it's a swing trade, I look at the daily chart. I want the daily chart to be bullish if I'm going long, bearish if I'm going short. I want the indicators to line up. Then I use the 5-minute chart to enter the trade. Now, if you're just doing a 5-minute trade, just an intraday quick trade, you don't have to worry about the daily chart because you're not going to be in long enough. If it agrees with the direction, it's going to help because it's going to give you a little bit more impetus. But when you're trading, for example, long intraday on a stock that's bearish, you obviously got to get out of the trade pretty quick if it goes against you. All right, so we want to trade with the trend, both the stock and the market, right? And the SPY super system must align. This is the deal breaker. On a daily chart, you got to have current time frame and multi-time frame momentum, either bullish for long or bearish for short, right? And when you're going to take an intraday trade, a 5-minute trade off the 5-minute chart or 2-minute chart or whatever you're using, you've got to use the SPY super system current time frame momentum, current time frame momentum right here. This is what we use for intraday trades. This combination is what we use for swing trades. All right. Then you look for relative strength and relative weakness. Maybe you find 4 or 5 stocks that look good. Which one is the strongest trading against the SPY right now? Which one is the weakest trading against the SPY right now? And all you do is look at the price action on the SPY and the price action on your stock and find out which one is the strongest. And then you want to enter near support, sell near resistance. This is what it takes. This is it. If you do this, this is where you're going to get a very good win rate. Very good win rate. But you've got to make sure you stick to the criteria, right? Buy near support, sell near resistance. This is important. If you're trying to trade Netflix and it's up 8% off on the gap up in the morning, and it's extended from the 8 exponential and extended from the VWAP by a huge amount, you're chasing if you take it there, right? You're chasing if you take it there. There are situations where you can do that, but generally speaking, you should not chase. You should wait for it to come back. Okay. All right. CAT. This is the out of the money catalyst trades. This is the newest one. Now, this is one that I can identify them when I see them in the room. I've got a fairly lengthy video on this, on how to take these trades. Very, very detailed on how to do these CAT trades. And I'm going to show you some live here in just a minute, right? But that's what it means, out of the money catalyst. And I want to be very clear. Typically, when you're just taking a trade, a long trade, like a swing trade or a regular intraday trade, you should not be using out of the money puts and calls unless the specific setup is what I'm going to show you here, right? You've got to have high volume candles and you've got to have a lot of momentum because you're trading momentum. Boomcat trades are not necessarily directional trades. They're momentum trades. You've got to take the momentum and ride the momentum. If the momentum stalls, you've got to get out of the trade because you can't be staying in out of the money puts or calls for a long period of time. All right, I'm trying to be very cautious here about this because I don't want people just taking these trades willy-nilly, thinking that you can take any trade long with using out of the money puts and calls. You'll lose money, right? So this is Boomcat, and we're going to look at some live charts now. We're going to see SPY super system indicators and high volume candles in action. All right. The important thing to remember here is this combination of the indicators, the SPY super system indicators, not just when institutions are buying or selling a stock, but when they're buying in volume. Okay, they're buying it, but they're coming in with heavy volume. This is really important. High volume is one of the major things that identifies that you're getting really not just institutions coming in, but coming in with force. All right. So I'm going to show some live charts here. We're going to go to the live to the SPY super system again. I want you so you can see the exact setup used for the SPY super system, which is for usually the SPY Qs, IWM, intraday trades, and Boomcat trades. Now the difference between these two, one of the major differences between the SPY super system trades and the Boomcat trades is SPY super system trades use in the money puts and in the money calls. And you can give them a lot more time. You have a lot more flexibility to stay in a trade if it starts to compress. You don't have that flexibility in Boomcat. If you're in a trade with out of the money catalyst, you've got momentum needs to continue. If it doesn't continue and starts to compress, you've got to get out because the compression is going to cause a drop in the option premiums. Right? So I want to be clear about that. Both of these are using the same indicators, but the Boomcat trade is specifically using high volume candles. Again, so these extremely high probability trade setups use the SPY super system indicators and the high volume candles on the 5-minute chart to identify these setups. All right, this combination identifies not just when institutions are buying or selling a stock, but when they are buying or selling with major volume. This is quite a big deal. And both of these very powerful intraday trading strategies produce win rates over 85, as well as profit factors of over 4.0. I don't know if you know what, if you're familiar with what profit factors mean. A profit factor of 1.0 means you're breaking even. A 2.0 profit factor is extremely good. Anything that's over 2.5 or 3 is unbelievably good. When you start getting into the 4s, as a profit factor, that's really exceptional. The last profit factor I had on the Boomcat trades, which was from November 17th to just Friday, the profit factor is 4.86. And this is extremely good. And the SPY super system is producing about 4.3. All right. So these are fairly impressive ones. Typically, if you look at a good swing trading system, you're going to be looking at like 2.4, 2.5, 2.6, which is very, very profitable. But I just want you to understand, if you follow these correctly, this is extremely profitable strategy. All right. So let me go ahead and switch back over here to the SPY super system again. All right. So here we are. And I'm going to move this out of the way. Now, I'm going to just run through a few here. And then we're going to if anybody has any stocks they want to look at, they can just shout those out to me. And I'll go ahead and post them up here. But if some of the ones I did yesterday on the SPY super system trades, I did core. This is a 5-minute chart right here on core, COHR. And let's see where I took it. Yeah, I took this now. I took this right here. Now this was not. This is where the difference is. All right. I took it right here on COHR as a long. It was bullish for the day. It was up a lot. You can see it's up 8%. I took it here as it broke above. Notice how it broke above the 8 and the 15. See how it's bullish? It's blue bullish here, right? I had a high volume candle here, and I took it here. I took it right here as it broke through here. but I actually used in the money because I didn't have a couple of stacked candles, but it still produced a really good result. But here's what you're looking for: a break above the 8 or the 15. This little arrow here is called the pop out of the box. This the SPY super system produces when this stock is breaking compression. And so this is where I took this trade, and this produced a really good profit for me on core right here. COHR going up. See, it ran up from about 224 to about 228. Very nice trade. And where would I get out? Look at that. As soon as it flattens out, I'm out of there. All right. Now, I think that's on Heiken-Ashi here. Oh, you switch that. Candlestick, yeah, I'm on Heiken-Ashi. If I look at it in regular candles, there's what it looks like in regular candles. Right. So that's the core that I traded. That's basically a SPY super system trade on a stock. Let's see. Oh, Reddit. I traded Reddit yesterday too. Reddit, I took it. I made a note 245. I took this at 245. All right. So here's 245 right here. And so this is where I took Reddit short. Right, now you can see it's bearish. It's very bearish all day long. It's been coming down. But I got at 245 right here. I got the pop out of the box symbol. It's breaking down below the 15 and the 8 right here. The 8's here, the white line, well below the VWAP, and it had a high volume candle. So I took it out of the money put on puts in Reddit right there. See, I took out of the money puts on Reddit, and I wrote this thing down. I don't know how I get out right here. Notice the high volume coming back again. Tells you got to get out of the trade. I wrote that down, but it produced a really nice profit. Produced about a 38% profit for me in that amount of time on Reddit. And I also took Meta yesterday. This is Meta trade right here. And what time to take Meta? 9:50 in the morning. So let's go back to 9:50. Oops. Let's try Meta again. Punching my keyboard with my hand. There we go, Meta. All right. 9:50. This is where I took the trade. See the high volume candles. Now remember, when you get a white high volume candle like this, that just means that it's closing higher than this candle, but notice it's still in a bearish trend. But this is where I took it, right here. As I took it right here on this breakdown below the VWAP, see the pink line, with a high volume bearish candle. I took it here, I wrote it here, and I get out right here, right before. As soon as again, it was an cat trade. I can't have compression start to come in or anything the stock move against me. That's where I took it off, right there, from Meta yesterday. And another really nice trade, by the way, on Meta. Right, so that's kind of what they look like. I'm going to see if anybody wants some stocks. CIFR, Rob? CIFR? And I don't know, are you talking about for 5 minutes or daily, Rob? 5 minute or daily? I'll put them both up there. Hey, Sandra, did you scan for Meta? Meta came up on one of the scans right here, the cascading down scan. Yeah, I have a bunch of scans in TC2000 too, but it did come up on the cascading down. I mean, when it would, you can see that. There's Uber, by the way. Palantir daily, Scott. Let me look at the CIFR that Rob wanted. Is CIFR 5 minute chart. Let's take a look at the daily chart on it. Yeah, a pretty choppy stock here. It's not producing any of these for some reason. I don't know whether this thing has not been around long. It's been around a while. Cypher mining. Oh, I've got to switch to daily. Here we go. There it is. Right, the CIFR. Right, so it's pretty choppy. I know it's a mining stock, but it's under capital markets. Nothing here that gets me too excited. It doesn't really have any any reason to take it on the daily chart. Notice it's below the 8, below the 15, everything's sloping down. So I wouldn't, oh, you want on the 5-minute? Okay. The 5-minute right there. This is yesterday's 5-minute chart on Cipher. Gap up in the morning, a little bit of high volume here, and then pretty choppy all day. You notice the candlestick, the colors here are going back and forth, changing colors back, red, bullish, bearish, bullish, bearish. That's a chop. When you see this kind of stuff, you're not getting any kind of consistent momentum here. It's just chop. Scott, Palantir daily, all right? Something that's been hammered lately. Still getting hammered here. Putting in just a kind of, let's call it a doji candle right here on a bearish one. It really doesn't have any direction. I wouldn't take it short again right yet. You want to see what happens here on Monday to see whether it continues to slide down or not. On my chart, on my TC2000 chart, I got a couple of support levels that it's on right here. But again, I wouldn't short it. It has high volume coming in, and this is actually a high volume candle here too. So it's getting a lot of volume. Alan, how far out of the money and what expiration do I use? Well, all of the UMCAT trades and SPY Super System trades, if you're trading options, they have to have weekly expirations because I'm only taking current weeks. Right now, some of stocks now, the Mag 7 and like Broadcom, AVGO, and some of the crypto stocks, they now have expirations Monday, Wednesday, Friday. I'm going to take the closest expiration I can get because I'm only in the trade for the day, right? Most of the time. Now, the caveat is on the SPY Super System, if I'm taking calls on the SPY, puts in the SPY, and it's like 2 o'clock in the afternoon, I'm going to use the next day's expiration, right? For SPY Super System trades, I usually take 1 strike in the money on the put of the call. For the UMCAT trades, it's going to be anywhere from 1 strike to 3 or 4 strikes out of the money, depending upon the volatility of the stock. What is the main criteria for a scan in the 5-minute UMCAT method, Doug? Well, the main criteria is what you're really looking for. Obviously, you're looking for cascading up. You're looking for stocks that have gone up 3 candles in a row, and you're looking for stocks that have at least the current candle with high volume, preferably even more than 1 candle with high volume. High volume, it's momentum. You're looking for momentum. Stock close higher, higher, higher with high volume, right? That's momentum. Hey, when you want KTOS? If you put a symbol out there, please tell me what particular time frame you're looking for. Right, this is KTOS on a daily. Not much to see here. Coming right back down, we did have a high volume bounce, but you notice this is still very bearish. And if you're trading it on a 5-minute chart over here, all right, there's KTOS yesterday. Gapped up, flat as a pancake. A couple of little bounces here in it, very bullish. You notice that they're buying it. And then they switched over to some selling. Pretty choppy stock. Nice little move here at the end of the day. Is it went from selling to buying right here on this candle. And you probably could have made a little bit of money on something like that. But there's most likely much better setups. And the small cap gap is like STX on Friday, okay to trade. They are for intraday trades if they're not too far extended on the daily, Gordon. If the stock is extended too far on the daily, don't swing it. In my opinion, do not swing it. But you can intraday trade a really strong stock in the morning if it's continuing with momentum to the upside, or stock that gaps down with price moving momentum to the downside. You can intraday trade it. Does it work in futures? Absolutely works in futures, Scott. I've got people trading futures off the thing, and they love it. I mean, listen, candlesticks are candlesticks. Momentum is momentum. In fact, I think they have some high volume candles built into the Ninja platform now too, if you want to talk to them about that. You have a video on how you toss the setup to make trading efficient and how many different assets can an average trader do. Yeah, I have videos on exactly how to use these indicators. I haven't done the one in high volume yet because I haven't had time to do it. I just put that on recently, but I'm going to do one. But I have a video on all the other indicators and how to use them, and basically how to try to put them all together to find the very best trades. And how many average? We don't do an awful lot of trades. I mean, I do a lot of UMCAT trades, but as far as swing type trades that we send out on alerts and stuff, not very many. You know, maybe 2 a week or 3 a week sometimes, sometimes more, but usually not more than that. And it's important to understand that the trading environment right now is horrible for making trades for swings. The market has been absolutely volatile as heck. A lot of gap ups, a lot of gap downs. You have to have a trading style to handle that, which means typically straddles and strangles for overnight is the best right now. And we do take a couple of take a couple of swing trades, which I'll show you that worked out pretty well. But it's a tough market environment. Doug, on a cascade up 3 bars, don't you have to wait for a pullback? We're chasing. This is the difference between UMCAT trades and SPY Super System trades, Doug. UMCAT trades, you can chase if you're stacking high volume candles. But remember, if you're chasing, and that's what you're doing. I mean, you're stacking 3 green candles that have high volume, it's moving up pretty fast. If it's moving up through a support level, that's even better because now it's breaking out. But if it's actually too far extended, you can trade UMCAT off of that. But as soon as the stock compresses, 1 or 2 candles to the side, you got to get out. That's the difference. And I pointed this out pretty clearly in the UMCAT strategy video. Hey, Sandra, NEE daily. All right, NEE daily. Let's switch over to NEE daily. All right. Okay, pretty interesting chart right here. Extra energy. Energy's been pretty strong lately. It's not a bad setup. You would obviously, to me, if you're going to go long this, you'd want to wait for it to get past yesterday's high, right? Which was a 90.99. So you really want to wait for this to get to $91. But it's a pretty nice. This is pretty nice bullish setup. Notice the SPY Super System telling you the institutions are buying this. I mean, it's moved up here. It's kind of chopping sideways, but it's definitely getting ready to break out. It appears. All right. Day chart on SanDisk. I'll just take 1 or 2 more of these, and then I'm going to move on. SNDK for daily. The SanDisk has been absolutely monster, of course. If you're in it, you know. SanDisk. Toss is a little slow on the weekends because they're doing maintenance on this thing, but this should populate at some point in time. But this is a SanDisk right now. I know it's bullish across the board. We had this big pullback here, which was a big pullback, $725 down to $500. That's $200 drop. And then yesterday it's coming back in again with a bounce off the 15. I like this bounce off this 15 right here on the daily chart. That's actually one of the levels I use for these 8 and 15. The 8 and 15 can work together in tandem. A lot of times when stocks break through the 8, they'll stop at the 15 and start moving up. But I do like SanDisk for a long from where it is right now. I don't know why this isn't populating for them, but again, I think a swim is doing maintenance right now. How often do I trade UMCAT trades? Typically, Gordon, I did 5 yesterday. One day this week I did 7. Another day I did 2. It just depends on the setups. I can only trade when the setups are there. I can't force them. Can I show a 5-minute YM? You're looking for futures. What is the YM yesterday? You know, this is the Dow, and there's an new all-time high in the Dow right there. And this was a nice run here. Go back and look at the Dow during the day. It was very strong in the morning. See the white candles, a lot of volume, moving up, riding along this 8, really nice. You get out right here, and then you could get back in again right here. As it broke out, buying is going crazy, of course, you can see. But you ride this up, and then this is a blow off top right here. So that's the YM. CVS using options. CVS using option. Yeah, we use options. I'll just show you CVS. There's the daily chart of CVS trying to bounce. You see this is a 5-minute chart trying to bounce here yesterday, but it was pretty bullish. A couple of good setups in it. Not a lot of high volume candles in CVS after the open, but there was a few. All right, and CVS on the daily chart right here. All right, I need to move along because this is going to get too long. But I did want to let people, you can see where CVS is here. It's trying to fill a gap, by the way. See the gap fill? This is where the gap fill is, right here in CBS. All right. Okay. Okay. So there is your SPY super system trades and your UMCAT trades. How to use them. Again, for SPY super system, you're just going to use SPY's cues. Got a bit weird candle in there. Here's the cues right here on a 5-minute basis I want to go through. So do we have any SPY super system trades yesterday? Not an awful lot. It was very choppy. I mean, you could have taken it early on here, see how it went blue, and ride it up and then get out, but you got to get out right here. And it was strong yesterday. You typically should not trade a reversal here when the stock is that strong. You want to wait and lean toward the long side. But it was very choppy. I didn't really see any reason to take those SPY super system trades yesterday. You would give credit, closed out the day pretty strong here. Went to blue and green right there with a high bond candle. Some people will take that as a quick scalp toward the end of the day. All right. Okay. So I hope that clears up a little bit of how we use the. I really want you to understand how effective the SPY super system strategy and how effective the software is. And again, we talk about this all day long in the room. So, okay. So there we are with some live trades in the UMCAT and SPY super system trades. Again, I know this is taking a long time. So, all right, we're going to move forward here. I want to show you some trades we took recently. This was an NVIDIA trade we took here. This is a 5-minute chart. This was an intraday trade on NVIDIA. This is before I had the high volume candles. But notice going red to blue right there. You see the pop right there? That's where you take it. Right there as it pops above the 8 exponential moving average and right up right there. And then you take it off. SPY super system to the downside right here. See, it goes from yellow, it goes from green to yellow, buying to selling right there. High volume candle, a pop out of the box. And now with high volume candlesticks, it gives you even more indication of how strong the trend is. That was a very nice trend for a down move right there in the SPY. All right, this is SPY to the upside. Red, yellow, blue. Selling, buying. Pop out of the box symbol, coming above the VWAP on the 5-minute. You ride it right up, you get out right there. Okay, so that just kind of explains what these look like. And I'm going to go over a few more charts, and I'm going to show some of the results and show you the offer. But I know this has taken a long time. But I did want to get into the details on the UMCATs and the SPY super system trades. And here's somebody, by the way, that doesn't have a methodology. They're trading with emotion, and they're gonna lose their money. I mean, it's really pretty simple. If you're trading emotionally, watching your P&L, you're going to end up losing money. This is what you feel like. This is what I feel like when you have a methodology that you know works. You've got great confidence in it. It's not going to work every time, but it works enough that you can make consistent money. All right. And this, I just put this in quickly. It's important to learn the process that I went over, what we look for before you focus on your results. Focusing on results are not going to tell you whether you're going to be consistently profitable or not. They'll tell you how that trade worked out, but it's not going to tell you if you're going to be consistently profitable. There are plenty of good trades that don't work, and a lot of bad trades that do work sometimes. And if you take a bad trade and you make money on it, you're much more likely to repeat that situation. All right, so the alert service we'll talk about quickly. It's designed for day trades and short-term swing trades, designed for traders who can't watch the market all day, and real-time alerts are done on the highest probability trade setups. All right, that's my equity curve for the year, 2025. That was based on $2,000 per trade, entering per trade. All right, so I'm going to show some results here. I'm going to run through these fairly quickly. On one of the charts I showed a minute ago, showed red candles down with the wicks pointing up. I'm not sure what that would have been. I mean, you're talking about regular candles? I mean, you can have wicks pointing up. Are you talking about the arrows pointing up? I'm not sure what you mean, Dan, about that. Okay, so this is the trading results we've had in the room. This is in 2023. This was assuming $2,000 entered per trade. So if you were buying options and the options were $1, you'd buy 20 of them. If they were $2, you'd buy 10 of them, etc. But just trying to even out the amount of money. This isn't necessarily what everybody trades, but I had to use some number to come up with a quantification of the sales. So of the trades. 2023, 60,000 for the year. 2024, 54.9, and this year 55.11. And the difference is a lot of times the difference between profitabilities is the market you're in. Trending markets, you're going to do a lot better than in choppy markets. We've had a lot of choppy markets. Now I think adding these don't include. These are all the trades that we posted in the room. These don't include any SPY super system trades or any UMCAT trades. Those would knock these numbers up unbelievably high. So I'm not putting those in there because I can't post them. But as far as how they're working, they produce huge results. But again, I don't think it's fair to post them out there because they'd be the results I've gotten. And since I can't post them, I don't know what other people are doing with them. I know a lot of people are making a lot of money with them. Okay, this is just kind of a little blurb here on last year when the tariffs went on, went off. During this end of March, 1st of April, market was down 10% in 2 days. SPY was down. That's massive, 10% in 2 days. These are the only 4 trades we were in. All right, Broadcom, Nike, Sarepta, and NNE. We were in all these trades. We were in them short in the room and on the alert service. And these are what we made for profits here. 39%, 216% on Nike. This is an outlier. We don't make those kind of profits normally, but the tariffs killed it. It just dropped like a rock. Sarepta also 78% and 25. This is more normal on NNE. Okay, so we're going to look at that. This is to date this year 2026. Just finished up the month 13 and 2. Not enough. There weren't a lot of trades this month, so just a little over 2,000 bucks. I'll go back to last year, June 2025. Month I was on vacation. So we only had 11 trades, 10 wins, 1 loss, 37.90 in profit. And here they are, and you see we take losses. But again, see the percentages. This is what you're going to see a lot. 20, 25, 17, 23, 42. This is the range most of the trades we take fall in. July, we did a huge number of trades. Market was great. It was trending. We were able to take a lot of trades, and we took a lot of trades. 33 trades, 30 wins, 3 losses, 91% win rate. A really big month. This is not normal. Don't think this is normally what you're getting, 2,000 per trade. This is really an outlier again. A very big month. August, 84% win rate, 59.60. Here's September. I posted the trades, so you can see. Again, notice we have some losses here. 21 and 4. Still 84% win rate. And this goes all the way back to January 2024. I'm not going to go through all of these because there's too many, but I just want you to see what your percentage gains are on these stocks. This is what you're normally going to see. And the win rate, 90, 92 in February, big month in February, 11,745. May, 88% win rate. So you can see how these are going. I don't want to go in and do every single month. So, but 86%, 92% in the alerts. July, 85%. August, 89%. September, a losing month last year. Now in 2024, this is the only losing month I had that year. Again, 8 wins and 5 losses, a horrible record. But I just want you to be aware that occasionally you'll get a losing month. Not very often. I think I've had 2 or 3 in the 5 years. Give me a little hoarse. I need to drink a little water. All right, so we're almost through this. I appreciate folks sticking around because I know it's long, but I did want to get into some of that stuff. I know it was important to some people to hear that. All right, so moving ahead here, the alert service, this is what it looks like. You're on the alert service, this is what you get. Hey, Gordon, most value comes from room trades, not alerted trades. Well, it depends. I mean, the alerted trades are, not everybody can trade can trade all the time. But the room trades, the UMCAT trades have a higher win rate or higher peak profit factor on the SPY super system and the UMCAT trades than they do for swing trades. It's just normal because you're trading very quickly. So yeah, there's a lot of profit comes from that. But you can see what the room did, and you can see what they were every month. So this was like 2025 for the first 4 months here. That's good money every month. for $2,000 per trade. Right, so here's what the alerts look like. It's going to say the date. It's going to say the stock, Nike. It's going to say buy April 11th, for example. This is you're buying April 11th, 67 puts. So here's your expiration date, April 11th. Here's the strike price, 67 puts. Here's what you should pay for it. And then you get, after that, we get another alert later with the sell order, and then another alert telling you that the strike was closed. And if there was an adjustment in here, you know, sell for 950, sell for 850, you will get another alert for that as well. All right. So again, how do we make these results? Obviously, you can see the SPY Super System does it for us. And we look at, this is just what we look at in the system. The calculations are done on momentum, trend, money flow, all of those things to come up with the SPY Super System indicators. All right, so there's the indicators there. This was a template you also get if you buy the software. This is for intraday trades. If you're doing just SPY Super System trades or UMCAT trades, you can get this as well and swap it back and forth, swap back and forth between all the indicators and just the ones you need for SPY Super System trades. This was a Q trade here. This was a Heiken-Ashi reversal candle right here. This is where we get in the trade. Green, yellow, right? Take it here and you ride this one down and you see how big a trade that was. All right, the SPY Super System. This is the trading on the SPY, the Qs, the IWM. You can also use it on futures, and actually you can use it on stocks. But I just wanted to quickly show the results I had with this. This is 2 years ago when I first started this. I don't track every single one. I look at it I do have it in my TraderView account, but I can't just post them all. It's way too many. But you can see the number of trades I took during this time. It was a lot on the SPY Super System. This is before I had UMCAT, right? So they made good money every month. And this was the last quarter of 2024. Now the SPY Super System trades, again, these are trades that I took, right? And this is what I produced. This is what was in the room. If you were in the room, this is what you would have made with intraday trades, well, actually swing trades. These were basically swing trades for the trades that were posted. And none of these profits are reflected in the other one. This is separate. This is separate. None of these trades are in here. None of these trades are in here. All right, so that was a pretty good quarter. All right. So again, here's a SPY Super System trade here, moving up above the VWAP, and it keeps going. Right, so you can see here where it went red to blue on the. This was before we had the oscillators down here, but these are fairly older charts. So I'm just going to rip through these. I don't think it's really necessary to go over all of these because we just went over a lot of trades in real time. Those to me are what's really important. But this was one we had recently online, 51% profit. This was actually constructed as a swing trade, but we made 51% in an hour, so we took the profits. You can see here, it was bearish. Here it went green to yellow. Take it here, and there it goes. All right, I'm not going to go over all of these. I'm just going to get to the end of the presentation so we can talk about the offers that we have here. And I think this, when for the VWAP intraday indicator, do you use the general setting on toss or pin the VWAP to another starting point? No, I just use the general setting. I don't use a pinned VWAP. A VWAP is created by the software from the start of the days. And I know a lot of people use VWAPs that they pin to certain earnings dates, quarters, etc. I don't use those. I just use the 5 minute, how it's normally constructed on the 5 minute chart on Thinkorswim. All right. And let me look at something here. Okay. So these are the offers. I got one other one here too for the Super Bowl weekend special here. I'll copy that over and bring it over here in just a second. These are the alerts. These are the offers here on for the trading room and the text alert services. All right. So this is the trading room and text alert service. You get 2 weeks free trial if you sign up, and there'll be a link, by the way, in the chat box for these. Free 2 week trial. You get the alerts. You get the trading room. You also get all of the videos. I think 31 videos now on the strategies we use and all the strategies, all the indicators, how to use them. And also we have a Discord room with a couple of other professional traders. $496 for a quarter, right? You just use 2-week trial right there. Or you can do a one-time payment. This is you get into the room forever for $24.98. You get into the room and the alerts forever, and obviously you get the same videos. Get all those to see as many times as you want. And yeah, I'm in there every day, so you're getting a lot of education when you're in the room, because that's what I spend the most of the day doing. Besides trading, I'm trying to educate everybody on how to use the indicators we've got and how to do more deep technical analysis. All right, and this on the live trading room, by the way, right here, they have a special right now. They're running for an annual membership, $11.97. So this is forever. This is if you just want to take it for a year. The room, try it for a year. A lot cheaper than the quarterly. A lot cheaper than the quarterly. 11. That's really a good deal. And this is the SPY Super System pricing right here. I think there's, let's see, okay, yeah. So this is the annual SPY Super System. This is the annual membership. This is for the software itself, right? Software itself, $19.98. It gives you the software. It gives you a month in the room, the trading room. You get the scanners, of course. You obviously get all of the videos, all the training videos, and you also get it installed by thinkorswim on your platform. They'll put this right lane. I'm sorry. We'll put it on your thinkorswim platform. For free. They'll take over the machine, put it on, and you'll get all the updates to it. Anytime there's an update to it, as we make improvements to it, you'll get all of that. And then, or you can take it for a lifetime. Now, there's a thing here. I'm gonna. This is for the SPY Super System software. Okay, let me copy this. Let's see if I can plug this over here. All right, so this is the one that they just gave me here. This is for the Super Bowl weekend special. This is for the SPY Super System. All right, the software, SPY Super System software. Again, the annual membership, $19.98. What they're doing here is they're giving $19.98 is you get it forever, as opposed to a year. So this is not normal. But you can get it forever for $19.98, and you can use this code SAVE1000. All right, and that will get you the software forever, updates forever. You don't have to be in my room. You get in my room for 3 months when you do that. 3 months of the live trading room. But again, if you have the software, once you learn it, you can be in the room or not be in the room, but you'll be able to trade off of this stuff. All right, so that I just found out just now that they had that today. So. All right, so those are your this is the best deal for the software for sure. Same price as lifetime. You get this weekend. You get the lifetime for $19.98. All right. Let's see if I can go back to where I started here. Let's see. And again, if you can call Rory if any questions, you've got 786-732-4656. One thing I did a calculation on the subscription investment. That means how much you pay for the software, not for the software, but for the room. And it was about used to be $1,600, but basically the profitability is about 40x ROI. You're getting about 40 times what you're paying for the subscription in profits each year. It varies up and down, but it's very close to 40x ROI. So this is pretty good. And again, it's consistently paid for itself. Obviously, past performance is not indicative of future results, as always. Hey, Wayne, you're welcome. All right, so those are your offers. Trading room here again. Trading room is quarterly right here, $496. You get a 2-week free trial. One-time payment, $24.98, or you can do an annual for $11.97. This is for special membership. And if you have any questions, just call Rory, 786-732-4656. He'll look at that. All right, and the SPY Super System, we just looked at that. I don't know where it went, but so it was. Here it is, yeah. 1998, forever on that software. You get the software one time, you own it. That's it. That's really a good deal for the software, because normally it's 1998 a year. All right, very good. Great job, everybody. Am I part of Right Line Trading with Mark? Yeah, I'm with Mark Miller. You're talking about? Yep. I'm one of the professional traders here that I trade options. I'm the only one, I think, trading options right now. I'm not positive, but they have a couple of other folks who trade futures. But I don't do that, and I'm using the SPY Super System on Thinkorswim. Hey, Rodney, you're welcome. So look, I appreciate everybody coming today. I appreciate you taking time. I know it was long, and I did want to, and I had answered a lot of questions. I know some folks, we wanted to look at their stocks. I like to have the live charts up as opposed to just graphics. Because, I mean, you can make graphics. I've seen webinars, you can take graphics and there you'll see stuff, and it kind of gets cherry picked. And when I go to live charts, we can actually look at stuff that's actually happening. So appreciate it. I appreciate everybody in here. I appreciate coming in on a Saturday. I hope you folks, thank you, Michael. Appreciate that. I hope everybody can make it, and I hope I get some of you folks to come and join me, because I love having you in there. I have a lot of people in there, but I answer every question that people ask every day, and we talk about all these strategies every day. UMCAT strategy, SPY Super System strategy. If I see an UMCAT trade and I take it, I'll tell you I'm taking it. And I did yesterday. I actually went through step by step as I took an MCAT trade. One I had for a loser, three I had for a winner. I went through it step by step, where I took it, why I get out, why I stayed in. I was trying to be very specific, because I can't post these, but I can at least explain the strategies behind them. All right. So thanks, everybody. Appreciate it. Look forward to seeing you in the room. And again, if you have any questions, call Rory, 786-732-4656. And